Welcome. In this video, we will talk about India's black gold, which has now become a blocked growth. Coal India, a company which has got a big threat due to the government's decision to allow private players in commercial coal mining. A disclaimer, all views expressed in this video on this stock is our beliefs about the stock. There can be totally different views available in the market and those can be true too. Let's look at some good things about Coal India before we go further. Coal India, a Government of India enterprise started in 1975 by merging all the scattered mining companies of those time. It is one of the largest coal mining companies in the world. It went public in 2010 by offering 10% of government's equity to the public at a premium of 235 rupees per share. Since 2010, the stock has gone to a high of 447, which happened in August 2015. It took 5 years to almost double from the price where it was issued, and from there, in the next 5 years, it lost 75% of its value from its peak. Learn stock investing using simple methods. Get the confidence to buy and own great businesses of our country in your portfolio. Grow your savings along with the economy. Get to know the fundamental and technical approach to trading, how to protect your risks, how to achieve your financial goals using your investments, how to protect your capital when the market turns against you, how to have a process built to make your investment journey mechanical. A 4-hour online training course on stock markets with 1 hour of handholding as you start your journey. Please write to us on the contacts to know more. A fairly profitable company. Last financial year sales inched close to 1 lakh crores with a profit of 16,000 crores, of which nearly half of it got distributed as dividends. As it is a government-owned company, it became a regular source of income for the government, and this became an advantage for the shareholders too, because we will have continuous flow of dividends. How long will this dividend come is a question to be answered. So far from 2010, the total dividends received by its shareholders is 155 rupees per share on a face value of 10 rupees. For those who have invested in this stock in the IPO by paying 245 rupees per share, looks like there is no capital loss, keeping the current price of the stock in mind. Current stock price is 120 rupees, dividends received, total dividends received is 155, add both, total value is 275. Only that it has taken 10 years and the 245 investment has brought only 30 rupees profit. There is a belief that if you invest in government enterprises, your capital is safe. Probably this is what they mean by saying capital safety. In 2014, to meet the disinvestment needs, government began selling its holdings in the public sector enterprises through the CPSE index. People became gung-ho that they are getting all the Maharathnas bundled together and they will have safe and secure returns. Here is a list of all the Maharathnas. Sorry to say that, apart from their name, there seems to be no grandeur in their performance. Keeping aside IOC and NBCC, most of them have failed with poor returns, that is, more than double-digit negative returns. Miserably failed on the expectations that investors had on these companies. Coal India has 20% exposure in the CPSE index, and the stock is down nearly 60% from the time the ETFs were issued. We can realize the impact that this stock has created on the index. So far, government has done 7 issues of CPSE ETF since 2014, thereby collecting about 50,000 crores from the public by selling its assets. Apart from the 5th issue, all other issues of CPSE ETF came at a discount of 3 to 5%. Whenever there was an issue coming at discount, market sensed that the promoter itself is not valuing its company at a higher level. This made the market to lower the prices of all these stocks in the markets. In spite of all the discounts that government offered on sale of its asset, investors, even after six years of investing, are holding 20% loss on their investments. If we observe here, almost all these companies are controlled businesses where private players are almost absent. Fully controlled ensure that they don't have competition. They can have their own prices and government will buy their product or people will buy because there is no alternative. Let's take BSNL for example. I think most of us will remember the OYT telephone connection that we used to get at home, where after paying 15,000, we will get a connection in 1 year's time. If you go for a normal connection, which is non-OYT, you will get your connection after several years. I remember getting our first phone connection in our office in 1993. After paying 15,000, we had to bribe everyone from the JE to the lineman to get our connection in 1 year. Those days, when we have a phone connection at home, it used to be party time. Today, if you want a phone connection, you can go across the road and get your connection in just 5 minutes. Where was BSNL at that time and where is it now? 15,000 crores of accumulated losses, and we are happily funding this organization by our taxes. Similar kind of organizations we have, which we are proud of, like India Post, Indian Airlines, state finance corporations, government run hotels. These are businesses where private players have come in and showed that they can be run in a far better manner than what they are doing in government ownership. Ownership of Coal India. 66% of the company is owned by the Government of India, 8% by foreign institutional investors, 12% by insurance companies, 10% by mutual funds. Only 4% is held by the public. And this 4% public investment is from a very strong believer group of elderly and long-term investors. Sad to note that none of them have made any money from the stock. Top mutual fund holdings is held by HDFC AMC and Aditya Birla Sun Life AMC. Even they should be having the stock only for dividend yield. Now they will start churning their portfolio. So more selling pressure on the stock in the market, because mutual funds hold 10%, all of them will start reducing their exposure. Future of Coal India. Future looks bleak, as the major users of coal like power sector and railways are now moving away from coal to other sources. It is said that the availability of coal in India is in abundance, and yet there are some high grade users who are importing coal from other countries because that grade of coal is not produced in our country. This could be probably because of non-competence. This is an opinion, it can differ. Pollution threat is one more challenge for the future business, and next, competition, as we have discussed, can eat into margins. Following the announcement to allow private players into commercial coal mining, Coal India stock tanked 6%, giving huge strength to its already free fall in the stock price. The moment there is a feel of private entry into our government run businesses, they catch cold. Enterprising investors could gauge the level of protection that these businesses are run. It is not at all a good sign. Like this, we have several public enterprises which are bleeding and yet being run because government is funding their losses. BSNL, India Post, Air India are few of them where private came and ate away their food. Looks like Coal India too, post the announcement of privatization in coal mining, will be entering into the costly club of government support. Need to be cautious. In March 2020, Coal India has its highest coal production of 84 million tons, while March sales comes at 3% increase and profit drops 40%. All their costs are going up. Raw materials are up, employee costs are up, while if sales is not catching up on its growth, one can visualize what will be the impact. Though it will not have a sudden decline, looks like the downward journey has already begun. There have been some fund managers who have been optimistic about this stock for its dividend yield. When competitor comes in and sells at lower price, the pricing edge is lost. Margins will drop and profits will vanish. Looks like the dividend story is coming to an end soon. What should be the investment actions? Buying Coal India at this price, in our opinion, is a costly mistake. Looks like it will not go to its peak again. For those who have already invested, can stay invested for dividend income, while you should keep one thing in mind. On one side you will be getting dividends, on the other side the stock price will drop to the same extent. We have already seen the example. So now you have to make a choice on whether you are going to have your capital without any growth or look for some avenues which can give growth. On the long run, investing into Coal India for long term needs a rethink. For short term and trading, there is going to be immense opportunities in Coal India. Remember, in trading, we can make money both ways, up and down. So it is going to be a joyride for traders in Coal India stock. If your mutual funds are carrying more exposure to Coal India, you might have to think moving away from those funds to some that is having lesser exposure to PSUs as a whole. All the views expressed in this video are our opinions which can differ with others. There can be areas left out uncovered due to length constraints. No recommendations have been given for buy or sell. Please do your homework before your investment decisions. We have a group to share thoughts and ideas about trading. If you would be interested in getting trading ideas, please send us a WhatsApp request to our contact available at the end of the video. Thank you.